right, so let's begin the show and let's discuss about sectors and the right to have sector exposure in your financial portfolio, be it through sector-specific stocks or sector-specific funds. What exactly should you be looking at in terms of what sector should you be looking at? What should be the strategy? How can you prevent over-diversification in case you have an allocation in the form of sector-specific stocks or sector-specific funds? What exactly should be a profitable strategy for you? Let's get on board Aditya Agarwal, co-founder Wealthy.in. Aditya, good evening. Welcome to the show. A lot of buzz around going on sector-specific action in the market, looking at the current volatility, market not being able to sustain on the high levels. But then having said that, what kind of sectors? We are also looking at the quarter numbers now. What specific sectors are you looking at which might outperform in maybe a few quarters' time?
Right. Thanks, Kavita. Always a pleasure being here. So I think sector investing is obviously very interesting, sometimes very exciting because all sectors go through their cycles. And if you catch a sector in its right cycle, then you can make outsized returns. But that's also the downside of it, because if you catch a sector in the wrong cycle, then you end up sort of not making, not able to generate as much as, Sensex or indexes in returning. So if you look at like the way you can look at sectors is two ways. One way is to look at sectors that are poised for long-term growth, right? That are, for example, financial services, one sector in India. We still have a long way to go in financial services, right? So if you take that as a sector, we will see continued growth in this sector in the long term, right? Then lately, because of Indian government's focus on manufacturing and because of focus on, sort of Indianizing defense, those are a couple of other sectors where, you can look at manufacturing or units that are linked to PLI schemes or, defense sectors where you can actually see in long term reasonably good outperformance, right? But in short term, it's very hard to sort of predict in a couple of quarters which sectors is going to have a great run and which sector is not.
All right. Let's chalk out or mark out a basic difference between sector-specific stocks and sector-specific funds. Just give me a very basic understanding of these two aspects of investment, which you can incorporate in your portfolio.
Right. I think so. Basic difference is same, Kavita, right? So, for example, if I'm, let's say, picking up stocks on my own versus I'm trusting a professional fund manager to pick stocks for me. So, for me, let's say as an investor, I believe, let's say, pharma is poised for growth, right? I fundamentally believe that, okay, next 10 years, we could have, really large pharma companies in India. So, I'm bullish on pharma as a sector, but I may not be so confident as to what companies are the best companies in pharma, which companies, because, every company goes through a different dynamics, right? So I might sort of trust a fund manager through a mutual fund route rather than trying to sort of go down it on my own. Like similarly, right? Like I might trust small cap, right? But if I don't have bandwidth or time to find the right small cap companies, I'll end up choosing a fund manager. So it really depends on you as an individual. If you think, like sector specific calls, ideally you should make out of your own research, right? Or you should be out of your own conviction. After that, if you don't have the time, bandwidth, research, skill,
all right. So
energy,
Aditya, let's just twist this question and let me ask you, what kind of an investor should be adopting a stock-specific approach for sectors, and what kind of an investor should be looking at sector funds?
So I would say someone who can spend time screening stocks, someone who can spend time doing research. So my thumb rule is that if you can't give 5 hours a week to do research, then you are better off going with a professional fund manager who can do that research, right? So basic thumb rule is that. And secondly, some people don't have the skill set to read a balance sheet, right? Or to be able to read analyst reports, right? So if you don't have both, then it's best. And most people know that either I have both or I don't have both as individual investors. If you don't have both, you should definitely go down the route of fund manager.
Let's consider a case where Aditya, an investor, has sector-specific stocks and also sector-specific fund. What could be the case of over-diversification in this kind of a portfolio?
There's a very good question, Kavita. I think, in fact, we see people sort of missing that point. So if you look at, it's very easy to, first thing is you should calculate the overlap, right? So, and that's very easy to calculate because if you 100 rupees in two stocks, and 50-50 in those two stocks, and if you're 100 rupees in fund, then you can go to that fund's fact sheet and find out which all companies they're invested in, right? So if you end up seeing that, it might end up being that all of your 200 rupees in those two companies only, because, let's say a fund is also invested in those. So then clearly you are sort of under diversified, right? And similarly, if you sort of have 10 stocks bought on yourself, and then you also have the same 10 stocks in mutual fund, that also means that you're over diversified, right? So you should ideally look at, essentially, if you're picking up stocks on your own, you're bullish on sector, maybe you can pick up the top 3 players in the space, right? And sort of invest on those stocks on your own. And if you're going down the mutual fund route, I have personally myself, I've seen that, mixing the two doesn't really work well. Either you go down the stocks route or you go down the mutual fund route. One of those approaches you should prefer, rather than mixing the two approaches.
All right. Also, this is the case of over diversification that we just considered. Also, how can you be adequately diversified while investing through stocks or funds in a sector specific exposure? How can you intelligently place it? I mean, that's a tricky strategy for almost those kind of investors who have a very core portfolio ready and in place. This is for the investors who understand the market, who have a time frame for a particular sector, they understand the sector, and also have the risk appetite which is in line with the sector risks involved. So how can you intelligently place sectors, get yourself very well diversified in terms of across the sectors through a stock strategy and a mutual fund strategy in one portfolio?
Right. So in stock strategy, I think it's fairly, you can follow a simple rule, right? So for example, if I'm, let's say, bullish in banking sector, right? So I would pick up, let's say, if I'm investing stocks directly, then I would say, okay, let me look at 2 top private sector banks, 1 public sector bank, and 1 small bank, which could potentially become big in the future, right? So those 3-4 stocks could sort of complete my banking or financial services portfolio, right? That's one way to sort of, have the right kind of diversification. If I'm investing in a fund, of course, that fund is sort of taking care of diversification, right? So similarly, it's very similar to, for example, investing in Indian stock market, right? That I would have some allocation in large cap, some in mid cap, some in small cap. So the same approach you can take for your money towards when you're allocating in a particular sector. If you're picking up stocks on your own, just sort of diversify across large cap, mid cap, small cap. That's one way to do it. Second way to do it, as I said, is through, essentially, like as I said, right, like if you're banking, you can pick up one, couple of public private sector banks, one maybe public sector banks, and one maybe a bank which is new, or which is sort of, let's say, small finance bank, but can become a big bank in the future, right? So that's the right way to sort of diversify and, have a very, very sort of robust diversification strategy, even if you're picking stocks on your own.
In the current scenario, the kind of sector-specific stocks or mutual funds that you might want investors to think about to have an exit strategy from, any red flag on any specific sector?
No, I personally don't do any sector-specific recommendations, especially exit, because, India as a country, we are at 6-7% growth trajectory. So all sectors end up contributing to that growth, right? So if you're an equity investor, if you have 4-5 years of horizon, all sectors will end up doing well for you. So at this point in time, I really don't have an exit call on a particular sector.
Call in a particular sector through mutual funds, maybe you might want to suggest or recommend.
Right. So I think, as I said, right, so banking and financial services funds is something that are evergreen sector, right? Pharma, of course, is going through some consolidation phase. So maybe it's time to accumulate some pharma slowly. But yeah, there's some correction sort of going on there. So, and consolidation is going on. So there's a time to maybe sort of, I think the biggest one sort of, which are very hard to sort of play, are the infrastructure sector funds or stocks, because they go through like really, I would say, high volatility cycles. So those ones are the trickiest ones. But yeah, otherwise, I think even, companies that are sort of in consumption sector, like, or essentially companies that are playing on discretionary spending, right? So consumer oriented sort of funds or consumer oriented kind of companies are also another good bet, right? Hotels, which, like, for example, hotels, right, as a sector, because, Indians are spending more on travel and hotels, and that's something that is continued to poised to grow. So that is another sector which, sort of investors can look at having some allocation in their portfolio.
Right, Aditya, I think that will be all. Thank you so much for taking time out and helping our viewers with their sector-specific strategies, be it via stocks or mutual funds. Thank you so much.
Thanks, Kavita.